What exactly is equity? You see, it's more than just a financial term. It's a piece of ownership in a business. Now, for you folks who are looking to grow your wealth, understanding equity is as crucial as a good pair of glasses. For someone who's, well, let's just say, not as young as they used to be, it's about participating in the potential upside of a company's success. Think of it like this. You buy a share of a company, you're now a part owner, a shareholder. You share in the profits, and yes, you also share in the risks. It's a two-way street, just like life itself, but don't worry, we'll break it all down for you, step by step.
In the simplest terms, equity represents your ownership stake in a company. When you buy equity, you're essentially buying a small piece of that company. The more shares you own, the larger your slice of the pie. It's like owning a piece of a delicious apple pie, except this pie has the potential to grow bigger over time.
Now, why do people invest in equity? Well, they're hoping for a good return on their investment, plain and simple. They want to see their money grow, just like a gardener wants to see their plants flourish. These returns can come in two forms. Dividends, which are like a share of the company's profits, and capital appreciation, meaning the value of the shares themselves goes up. Now let's talk about why those little share prices go up and down like a yo-yo. You see, the market is like a giant auction with buyers and sellers constantly determining the price. Supply and demand, economic conditions, company performance, these are just a few of the factors that can swing that pendulum back and forth.
Just like that delicious apple pie I mentioned earlier, owning equity comes with a slice of risk. The value of your investment can go down, and yes, you could even lose money. It's important to remember that equity investments aren't like your trusty savings account. They're not guaranteed. The market can be unpredictable, just like the weather in Nebraska. Now, in extreme cases, it's possible to lose your entire investment. This is rare, but it's important to be aware of the possibility, just like you check the weather forecast before a picnic. This can happen if a company goes bankrupt, for example. It's like baking a cake and having it completely fall flat. It happens, but it doesn't mean you should give up baking altogether.
When a company faces tough times, its share price usually takes a hit. This is because investors become less optimistic about the company's future prospects. Think of it like a baseball team on a losing streak. Fans might start to lose faith, but remember, even the best teams go through slumps.
If a company goes bankrupt, it means it can't pay its debts. In these situations, creditors, the folks who are owed money, have the first claim on the company's assets. Equity holders are at the back of the line, so they may not receive anything if the company's assets are fully depleted. It's like being the last in line for a piece of pie. You might get lucky, or you might end up empty-handed. The beauty of equity is that almost anyone can own it. Individuals, institutions, even your Uncle Joe down the street, they can all be shareholders. It's like a big tent, welcoming people from all walks of life who want to participate in the growth of companies they believe in. Now, we can't talk about equity without mentioning the regulators. These are the folks who oversee the issuance and trading of equity shares, making sure everything is on the up and up. Think of them as the referees of the financial market, ensuring fair play and transparency. As an equity shareholder, you have certain rights, including the right to vote on important company matters. You have a say in how the company is run, just like citizens have a voice in their government. It's a powerful tool, and it's one of the benefits of being a part owner of a company.
So there you have it, a crash course on equity. We've covered the basics, from what equity is to the risks and the rewards it presents. Remember, investing in equity is about participating in the potential growth of the company, but it's essential to do your homework and understand the risks involved. We've only just scratched the surface of the fascinating topic. There's so much more to explore, from different types of equity to various investment strategies. Stay tuned for more videos that will delve deeper into these areas and move the knowledge and informed investment decisions